If you plan on purchasing an index universal life policy for max cash accumulation and more specifically for consistent income in the future, I think it's really important to have a lifetime income rider on your plan. Now, I'm going to go over that today in this video, but I want to preface this with I'm not sharing the carrier's name on this video. Not every carrier offers this. It's not in every single state either. However, if it is available, I do think it's a good option to have on your plan, especially if you want this for income. The reason for that is if you're taking distributions from your plan, from your index universal life plan in the future, and let's say you run out of money. If you run out of money, you would either need to pay the cost of insurance to keep your plan in force, or your policy will cancel. If your policy cancels, you actually owe back taxes on any of the gains inside of your policy, which is why I think a lifetime income rider can really provide a lot of protection to the client that is looking into this type of plan for consistent income. So the way it works, this is just purely an example. I ran this at max cash accumulation for a healthy 35-year-old female that is putting in $1,000 per month into the plan. Obviously, these numbers would look different for somebody else, but this is purely an example. So for a lifetime income rider, the way it works with this specific carrier that I'm not sharing right now is you can activate the lifetime income rider anytime after being 50 years old and owning the plan for at least 10 years. So both of those have to be true. So for this 35-year-old, can't be 10 years into the plan and activate it because she would only be 45 years old at that time. She would have to wait till 50. If somebody was 50 years old, they wouldn't be able to activate it right away because they would not have, if they just started the plan at age 50, they will not have owned the plan for 10 years. So you have to own the plan for at least 10 years and be at least 50 years old in order to activate this. Obviously, the longer you wait to activate it, the better. In this example, we are assuming a 5.95% rate of return. So these numbers can vary. These aren't guaranteed numbers. We just went with a more conservative rate of return example. But let's say this healthy 35-year-old at age 60 had $596,473 inside of their IUL plan, inside of their cash accumulation inside of their plan. If they wanted to activate their lifetime income, what this is saying is at that age, they could be paid $2,888 per month tax-free for the rest of their lives, no matter how long they live, and their policy will not cancel, so they don't have to run that risk of policy canceling and they owe back taxes on all the gains inside of their policy. So this would be a tax-free distribution for life. Now, at age 67, I plugged that in as an example as well. Let's say it grew to $987,709 based on that 5.95% rate of return. If that was the case, and they wanted to take the level guaranteed lifetime income, you can see that it would be $5,210 per month tax-free for life. And again, that policy will not cancel on them. They don't have to worry about paying a bunch of back taxes when they are in retirement and they don't need that kind of headache. So anyway, if you are looking into an index universal life policy for an income stream in the future, I just think this is something that would be a good safety net for you. If you want to learn more about this, go ahead and click the link in this post. A member of our team will reach out to you within 24 hours and they can kind of go build out a plan and go over some options with you if you would like to see them.